one of the big reactions that we saw was really in the bond market. And this came as a surprise to some people because everyone's so focused on stocks. I want to show you a chart of the sovereign bond sell-off. And it was not just here in the U.S. You could see that the blue line is U.S. 10-year yields on a percentage basis, how much they increased. 10-year German yields also rising pretty much in tandem. And this raises a question. Is this just year-end repositioning, taking profits in an illiquid market, or does this signal a material increase in borrowing costs for the U.S. as a result of a higher deficit? Julie, please answer that question for the rest of the market.
I would suggest you look at a year-to-date chart of the 10-year rather than just looking at the reaction we've seen over the past couple of days, because there you see this a little more in perspective. Yes, you've had this snap up in yields over the past several sessions, but if you look at a year-to-date chart of the 10-year, we're at the highest yield since March. So I would have to see something a little more sustained to the upside in rates before you draw any sharp conclusions, or conclusions about the estimates that the bond market is putting on economic growth tied to the tax bill as well.
Marty, are people actually scared of the deficit widening, or is this basically a sort of boogeyman that people are throwing out there at this point?
Well, as we talked about yesterday, the deficit hawks have all but become extinct in Congress. My prediction is they will come back, but they will come back in the context of Democrats fighting against entitlement cuts that are going to clearly be subject to some discussion once these deficits do broaden, and Republicans say we have to bring spending under control. How do you do it? Medicare, and Paul Ryan himself has talked about welfare reform next year being one of his agenda items.